In this video I will go through the major signals of Stacey Burke style trading. What are their major flaws and what's tricky about trading them? Because as we all know, the Stacey Burke signals very often fail and it's hard to find out when this happens. If you're interested in that and if you're interested in how I fixed that problem, stay tuned, I will go in detail. So what are the major Stacey Burke signals we're looking at and what is the fix I found to trade them better? So the major signals, as we all know, are first green day, first red day, inside days, 3 days of shorts, 3 days of longs. The major issue with those is these are only signals, and also Stacey says that all the time the day has to set up. So we need to have a pump and dump or a dump and pump, 3 sessions of rise. We need to see that other time frame traders are not driving a move against us and so on. So there's a lot of discretionary things to look at to really find out if the setup is right. So what I found is that if you add one element that Stacey also uses a lot, that's looking at the breakout mode of the different time frames. So if you look at multi-timeframe signals, as I call them, is the day in breakout? Is the day in a fake out from the high? So are you coming out of a failed breakout, for example? Inside days also, of course, fake out low, breakdown, and also across time frames. So are we in a weekly fake out or in a weekly breakout mode? So really tracking in detail in a mechanical way what happened to the last high or low of the respective time frame. And if you bring those two systems together, you will see this works very well. So the Stacey Burke signals really make sense once you add the multi-time frame signals to them. And on the other hand, if you trade multi-time frame signals, the Stacey Burke signals are a great confluence for them. So this is what we want to look at now. So I will go into Stacey Burke signals, how to trade them and compare them to multi-time frame, and then do it the other way around. So really look at the different crosses and correlations and find out what happens once you trade it in the one or the other way and what makes most sense. So let's go first through the Stacey Burke signal days. We have, as just discussed, first red day, first green day, 3 days of breakouts and inside days. Let's look into first red day, first green day. So first red day, first green day, as Stacey also says, it's just a signal. So this is not yet a real setup because there's a lot of things that need to happen at the same time that this works out. So in detail, it means that you have trapped traders. So that's why you also want to have a peak formation high or low where it pulls away from and then closes in the other direction. So for a first red day, you want to have a peak formation high and then a day that closes below the open, meaning that the longs of the day are trapped at the end of the day. And that's the logic of this signal, that the longs of the day are underwater overnight. This is pretty interesting. Dalton explains it that way, and this is where it really clicked for me because, I mean, most of what we are doing is psychology, right? So this first red day, first green day just means that you have traders underwater overnight that are anxious to get out of their positions. So once price comes up again into their break-even range or areas, then they just dump their position, giving the market bearish impulse, and then there might be a chain reaction and the whole thing collapses from there. That's the first red day signal. But for this to happen, there is a lot of things how to look at, especially the peak formation high. And then you look at the day, right? So you're looking for a long squeeze, then 3 levels of rise, a break in structure, or kind of a peak formation high, peak formation low, consolidation, parabolic blow off to the bottom. So that's the overall logic. The next one to look at is 3 days of breakouts. That's interesting because 3 days of breakouts is also mentioned by Dalton. Why is that a setup? Why is it extended? That means that you have the third day in a row where breakout traders are in profits. So they are in the money, and meaning there's a lot of liquidity below, and they are increasingly anxious that their profits go away with the pullback. So after 3 days of breakouts, you are looking for a collapse, but only if price shows weakness. That's the point. So they are anxious that they lose their profits, and once you get a pullback, they are anxious of just closing out their positions and securing their profits. So you have weak hands in the market for both of these setups. So what you want to do, you just count the breakouts in one direction, and then you really need a sign of weakness. So you need a break in structure, some kind of pattern that shows you that you have trapped traders at the high for a 3 days of long one, and then you are following the collapse downwards and see that you are kind of riding the profit taking wave of these breakout traders. Then the third one is inside days. This is very much in line with the multi-timeframe signals. You will see that this just means that a day closed inside the previous day's high and low, and this means it's a coil. So that's an inside bar, and this indicates a potential measured move. So how do we trade that? We trade it from the outside. You can also trade it from the inside once you have a parabolic channel from the inside with a clear higher time frame bias. I will show you that. But typically you wait for one side of the inside bar to be hit, and then you check behavior of price. Do you get a breakout continuation in one direction with a measured move, or do you get a fake out and they are going the other way and take the inside bar stops on the other side of the daily range? This is the setup, and we will check that now in a minute. So these signals are just signals, as I said. So there's always a lot of things that need to happen, and we need to be very careful that we not force the signals. This is the major issue with Stacy Burke traders, with like newer ones. They see a first red day and they just want to short that the whole day, no matter how the day sets up. And this can, of course, make you lose a lot of money. The same with 3 days of breakouts. 3 days of breakouts is still a bullish situation as long as it's not pulling back and trapping traders. So once you try to short that with every little pullback, you probably get wrecked very badly. So what's the other system we are looking at and that we are comparing or adding to Stacy Burke style trading? That's the multi-timeframe approach I was referring to. The multi-timeframe approach helps you to read the trend across different timeframes. So we are always looking at the extremes of the previous time frame. Here an example of the daily time frame. So if we have a breakout to the top, that is a bullish signal. And as long as we are above this breakout level, we remain bullish. And if we get another breakout on the next day, it's again bullish or even more bullish. So we have a second day of breakout. That's a clear uptrend. And we stay bullish below this previous day high level as long as we hold that level. Once we lose that level, this is a different situation then. Once we lose that level, that's a bearish signal, but not yet a reversal signal. So once we're losing a breakout level, a fresh one on the day, that's a bearish signal. But then there is kind of an escalation from there. So the first one is fake out of previous day high. This can still be just a pullback, and then it goes on. It's a bearish signal, but it's not very strong. And then if we are going further down from there, the next level to look at is previous day close. So meaning is the current daily bar, is it green or red? So once we are crossing the closing price, the rollover of the current daily candle happens and it becomes red, and traders become increasingly bearish and look at a potential reversal. And then the real reversal signal comes once we cross the last fully closed breakout bar. So in this case, the previous day's breakout level, exactly. So this is also in line with what Stacy discusses with the 3-day cycler. So if you have a false break at the high of the week, that's day 1. But he always says the day 1 is only confirmed once you hit a daily level on the other side. So that's the same logic. Otherwise, it's possible that it's just a pullback. So he wants the confluence of that it's at the high of the week. That's one thing. And then he wants also a level on the other side to be hit, that it's clear that the weakness of the whole move increases, and then it might reverse the other way. So this is the logic. And if we apply this logic in a structured way across time frames, so we look at that from the monthly. So on the month, it's the same thing. Previous month high, are we in breakout or in fake out? The same on the week. Week is extremely important because you see the weekly template then. Are we in a fake out high on the week and pulling back down? Or are we in breakout and just make a small pullback for a further continuation? This is extremely important to judge, and this is what really helps you to see the quality of different setups. So that's the logic, and let's now look in how these fits together with the Stacy Burke signals. So now let's look at the different Stacy Burke signals and how they align or conflict with higher time frame, multi-time frame bias signals. So first on the left side, look at alignment. So if you have a first red day signal, what from a multi-time frame perspective would confirm or strengthen this setup? So a first red day, of course, is best once it's a reversal into a bearish trend. So the multi-time frame bias shows you a potential bearish alignment that you really have a downtrend. So for a first red day, the best situation on the day is, of course, if you come out of a fake out high. So if the first red day broke previous day high and then closed further down as a first red day, then you have a fake out high, which is already traders trapped at the high with a peak formation high, and this is then the best situation to confirm a first red day move, a larger one on the next day. Additionally, on the higher time frame, of course, as just discussed, on week and month, you also want to have bearish signals. So the best is if you are in breakdown or fake out high on the week and also on the month. So that's first red day. 3 days of longs is similar. So for 3 days of longs, it's of course also best once this is only a pullback into a higher time frame bearish trend. So once you have a 3 days pullback that reverses into a higher time frame downtrend. So again, if you look at the bias that you want to see is if 3 days of longs breakout happened, you want to be in a daily fake out high, not in a breakout anymore in a best case. So if you have a fake out high, it's already a sign of weakness. Traders are trapped at the high, and the weak hands with their profits might already be willing to jump out in the next at the next positive situation for them once you get a little pullback to the top, for example, and then a break in structure further down. Same with the higher time frames, week and month, you want them to be bearish as well. Inside day, how does this work? Inside day, as we discussed, we just want to trade it from the outside. Stacy has no bias for the inside day, and sometimes, of course, if behavior of price confirms, you also would trade against a higher time frame bias. But the best is, of course, if the higher time frame bias aligns with the inside day. And with the inside day, you see this is exactly multi-time frame bias trading logic. So the inside day, you want to have a fake out of the last daily level or a breakout of the last daily level. And for a short here, in this case, a breakdown. So trading from the outside, maybe you have a fake out high, and maybe also on the higher time frames, you are in a breakdown or in a fake out high. So bearish higher time frame alignment, then you can be even more confident with an inside day trading a false break of the inside day high or a breakdown of the inside day low. So this is where the multi-time frame bias signals show you that your Stacy Burke signals are pointing in the right direction. But on the right side, in which cases they are failing mostly, and this is where multi-time frame helps you also a lot. So where is the conflicts? So if you have a first red day, you need to be careful once you are still in breakout on the day. So you might have a first red day, but the day might closed red, but still in breakout of the day before. So there are still other time frame traders driving that move. And as long as you are in breakout of the previous day and not yet do a fresh fake out high, there is no one trapped at the high. That's the thing. So, but in exactly the other way, they might just do a dump and pump move, and that's the classic first red day fail setup. That they just do 3 sessions of drop, trap the shorts that might want to trade the first red day, and then the other time frames traders are just doing another leg up and killing all of those. So you don't want to have the day in breakout, only if you have a very clear pump and dump setup. So if you have 3 levels of rise on the day and shorted from the high of the day, maybe, yes, that can be possible. But still, it's only a scalp because all other time frames might be still bullish. So week and month, of course, if they are in breakout or fake out low, you want to be careful to counter trend that also with the first red day. 3 days of long, similar. So if you are in breakout, as discussed before, you want to be careful. You only short that from the high of the day after 3 levels of rise. Otherwise, it's also the same situation that they might just trap the shorts and then do another leg up. And also the higher time frames. Yes, if it's all extremely overextended, also week and month, you might look at a pullback, but as we know, there is other time frame traders driving that move still, and you might be in a parabolic channel and you can lose a lot of money fighting that trend. So 3 days of longs, very careful once everything is bullish otherwise. And then it's better to wait for a clear sign of weakness, like a fake out high on the daily level before, and then it's a much better situation. Inside days, same thing. So if you are in an inside day, you don't want to counter trend the multi-time frame signals with your inside day setup. So an inside day where you might trade a breakout of the top, for example, or a breakdown, you don't want to have the daily before in breakout, and you don't want to have the week in breakout. So you also look at the alignment of the higher time frames, and you try not to counter trend those. Sometimes you still can do it because inside day, of course, is a very strong lower time frame setup. But once you are counter trending the higher time frame bias signals, you need to be even more patient and wait for it to confirm very strongly. So you really don't trade the breakout, but wait for a pullback. So behavior of price and timing needs to be perfect if you're counter trending the higher time frames. So this is the logic, and you see Stacy Burke signals are strong, but you need more help with them. Either you judge very nicely the pattern and the setup of the day, or you look at the higher time frame, multi-time frame bias signals, and they help you very much to identify if the Stacy Burke signals are failing or if they might work. So now let's look at really specific situations. So this is one of my favorite pages where you can explain the whole of Stacy Burke's system. So here we start with the closing range of the week. So that's your first, once you start trading on a Monday, that's the first kind of reference level you're looking at. So the closing range, what are you doing to the closing range? Are you in breakout, in fake out, or still trading inside? That's very important. So that's the first piece of information you get for the week. And then a classic pattern, that's a classic weekly templates. Of course, there's a lot of those. This is just one classic example, is that you might get a fake out of the low. So that's a day one trapping traders low. And then during the week, you get 3 levels of rise, 3 days of breakout, and then an end week reversals. That's a very classic weekly template for Stacy. So front side of the week, building liquidity into both directions in the end. So we have the stops below. And then at the back side of the week, trapping traders long, weekends in the market, and then a strong and large reversal into the closing range of the week again. So let's go through this piece by piece and look where his setups are and how they align again with multi-timeframe signals. So the first one would be buy low level 3 of a potential downwards move. So if you are in 3 days of short, you might look for a long here. But of course, this long is already tricky a bit on a Monday, especially. So trading reversals on Mondays is pretty tricky because typically you want to look at range expansions. So do not counter trend day one runners. So you need to be very careful there. So if you want to long this, you typically don't want to be in a daily breakdown. So here you see that's the first situation where multi-time frame might help you. So you don't long this, maybe only if it's very deep down low with 3 levels of drop here, but I wouldn't recommend that on a Monday because there you just don't know. Fresh money in the market, and the market might just blow on and make a range expansion to the bottom, even if you have a 3 sessions of drop. So what can multi-time frame help you there? You just wait for the closing range low to be reclaimed. So once you have a fake out low here, and then you get a retest of this fake out low on a day one 3-day cycle, that's a death line setup. So then the shorts are trapped, and then you might have a nice long. So that's the first situation. The second one would be then a long out of level 1. This is typically a pretty good long setup. You never want to counter trend that. You only want to be careful again once you have a daily fake out high. So if you are in a breakout situation here, maybe you have a first green day setup, so you're looking for a long. So then you really want to have the long from a continuation of the fake out low. So if the previous day high is not yet hit, then it might be a nice long. Or if you're in breakout of previous day high, but you want to be careful once you have a daily fake out high here, which might trap longs again. And this is also a nice weekly template that on a Tuesday day 2, you get a pump and dump template, fake out high, and then it blows further down for short setups. So you want to be careful here, and you see again the long. It's very helpful to look at multi-time frame because you're not trading into a fake out high, but you want to stay in especially daily and then also weekly. You might be already in a weekly fake out low here that help you to trade further up. Then in level 2, it gets a bit more tricky. The bias overall is rather neutral, so you can make a buy low or sell high in the Stacy logic on level 2. So here again, it's important to look at the bias of the last level hit. So if you are still in breakouts, then it might be a very nice long. But if you are making already a fake out high here again, then it might reverse already here. and then you're not even getting to the next level. And then we're coming into the backside of the week, and there typically Stacy looks at 3 days of long. You have maybe a first red day here, and you get a new day 1 3-day cycle at the high of the week. And then again, you have to check, are you still in a daily breakout? So if you're trading above previous day high here, you don't want to go full into this short. So you really want this level to be lost, that you have the bias in your back. Or also, if you have a deep pullback and you get a daily fake out low already here, maybe even in a day 0 setup, this might be a reset. So the reset is also shown by the multi-timeframe bias. Once you get a daily fake out low here, you have a bullish bias on the daily, and then the 3 days of longs and maybe even a first red day is contradicted, and you will not look at short anymore. Then the next day, end of the week, you might have a first red day, 3 days of longs, day 1 3-day cycle, then day 2. You don't want the low here to be hit, or you wait for this fake out low level to be lost, and then you have again a nice short into the end of the week. But you don't want to have trapped traders at the low, and this is again what you're looking at. Are you in a daily fake out low, or are you already losing that level, or are you in a daily fake out high that might help your first red day, 3 days of long, end of week collapse? So that's the logic, and how Stacy builds up his system, and you see how the multi-time frame signals help to keep you out of the failed signals. So now the other way around. Let's look at the classic multi-time frame setups and how they align with the Stacy Burke signals. So this is exactly how I trade it. So I'm not placing the Stacy Burke signals in front anymore. I'm really trading completely from the multi-time frame setups, and I am tracking the Stacy Burke signals, because for me the Stacy Burke signals are confluence. They just show you if you have weak hands in the market or a potential coil. So let's go through that. So my best setups are the retracement days. Retracement days are a previous day breakdown in the example of a short, current day inside. So that means in Stacy terms, that's a low-hanging fruit setup. So he also has this setup, but there is no clear signal for it. So it's a setup he explains, but you have to identify it for yourself, more or less. So I have a very clear signal for that. That's previous day breakdown, current day inside. That's a low-hanging fruit on the daily level. And what I'm looking at the same time is, as confluence, are we in 3 days of shorts? That's the only thing I'm looking at. I might still take the short, but if we have 3 days of shorts in the market, then you already have weak hands with the shorts in the market. And as we discussed before, Stacy Burke signals 3 days of shorts might point to a reversal. So this is for me not a setup, but it's a confluence signal that I might be careful with making another short on the 3rd day of shorts already in a row. Then previous fake out continuation into trend. So if you have a previous day fake out high, current day inside, and also higher time frames aligning, of course, as we just discussed the other way, it's great if this aligns with the first red day also, so it's closing red. And maybe also if we have a pullback over 3 days already, overextending the daily time frame, and then from that reversing into a higher time frame downtrend. So if I trade a previous fake out continuation into trend, I love to see a first red day and 3 days of longs. That's kind of the perfect alignment of the two systems. Then if we have a breakdown or a fake out on the day itself, so these are the best setups, the true retracement days, but this doesn't happen every day, of course. This happens all the time. So if you have a breakdown or a fake out on the day with higher time frames aligning, then the logic is still similar. So current day breakdown, it helps if the previous day is an inside day. So if we have a breakdown on the day, it's great if we have a coil on the day before and this points to a measured move. Then I love to have I love to take breakdown or breakout trades once I have an inside day in my back. And of course, this inside days might also be a first red day, or a breakdown might come after 3 days of longs. This is a mistake here. It needs to say 3 days of longs. So I love to see a breakdown continuation once we already have weekends in the market. Then fake out continuation into trend. This is a fake out continuation. Same logic as here, but with a fake out. Then of course it's also great if you have already 3 days of longs in the market and a first red day in the market. So it's the same logic as here, but it's also okay if you have the fake out, the last fake out on the current day. This is also good. The day before might still be an inside day. So we might have 2 days of breakout inside day, and then on the day another fake out of the high. That's a very nice signal. And then you have a trade the false break inside day setup, targeting the inside bar setups on the other side of the daily range, and still have the other confluences. So this is also a very nice setup once these signals align. Then reversal days. So reversal continuation, counter extended trend. So if you have 3 days of long in the market and you have a first red day, but on the higher time frames it's all bullish, then the logic is similar to the fake out continuation into trend. So if it's extremely extended and then still on an extended trend, so week and month bullish, but the daily is extended, maybe also the weekly, and then you get a fake out high and first red day and maybe also 3 days of longs. That's kind of one of Stacy's best signals. If this then aligns with the daily fake out high on the day or on the day before, this is also a very nice alignment and a perfect setup I would take every day of the week. Then rather 1 star, but also often a nice setup. Stacy makes you hunt this a lot, but it's of course tricky. It's a reversal counter extended trend. So also on the day you have a breakout, but you have 3 levels of rise, 3 days of longs. Also Stacy signals 3 days of longs, and maybe an inside day could be. So this means it's extremely overextended, and then you get after an inside day the collapse back down from the high of the day, or you just wait for it to be extremely overextended, and then end session typically is the best moment to take that. 3 levels of rise, 3 sessions of rise, 3 hours of rise. Then you take the reversal at the high of the day. Once it aligns with an 8-hour fake out high, you know I'm looking at that, and then it works out. So here you see the typical multi-time frame setups. You can trade them without looking at the Stacy Burke signals, but if you track the Stacy Burke signals at the same time, I found out that this is extremely strong, and these confluence signals make your confidence and win rate even higher, and it makes much more sense to trade it like this. So now the weekly template as an example one more time, looking at it from a multi-time frame perspective, and there you see now how this comes together in a perfect way. So let's say we are coming out of a monthly fake out high, weekly breakdown. So we have a higher time frame downtrend. We have a daily breakdown, closing range of the week into the day. So the first thing here you might have is a 3 sessions of drop, 3 days of shorts setup. So you might take a long here counter trend from the low of the week. But as said before already, for the Stacy situation, this is very risky. Only 1 star because it's a Monday and you don't want to counter trend a day 1 runner. So this is the first moment you could take a trade, but this is a very risky one. Then you have the daily fake out lows. This is the first bullish signal. So if you have a break up from the previous day low, maybe a retest, then this is a nice long. And then even more, if you have a daily breakout here, also Dalton says that if you have a breakdown here and a strong reaction from other time frame traders, it might blow up all the way through the other side and make a range expansion to the top. Then we might have a bullish close here. So we have coming out of a first green day. We are maybe in a daily breakout still. So here we make a breakout continuation long mixed bias because we are counter trending the higher time frames. But we don't have a daily fake out high, but we are in a daily breakout. So here lower time frames bullish. We have a first green day maybe, a breakout continuation, mixed bias, but it's a 2-star setup because the lower time frames are aligning. So you always look at these setups from the lower time frames. So you want to have the lower time frames aligning first, and then you look at the higher ones. And this then gives you the quality of the setup, but you're never counter trending the lower time frames. This is extremely risky and typically lets you lose your trades and potentially a lot of money. So this is the second trade, breakout continuation long mixed bias, and then you're pushing into midweek here. And then here is of course a couple of scenarios. You might have another breakout to the high with the 3 days of longs as we shown before, or you could also have an inside day, so it's coiling into the backside of the week, or doing already a fake out high. You might have a first red day here or here. And then from a multi-time frame perspective, as discussed before, you are tracking very closely the weekly breakdown level here. So you definitely want to be below this level to short. So once you're breaking up here, you make the weekly a fake out low. And then you might just trap this whole price action to the low and then continue further up, also especially out of the inside day. So you really want to see that you are trading below this daily breakout level here. So once you lose that, this is a daily fake out high, for example. And then once you break down here through the inside day, you have a daily breakdown, inside day range expansion, and then this is a very strong signal, backside end of the week, maybe first red day, maybe 3 days of long, maybe inside day, all time frames bearish. From this setups here, as you might have also seen in my backtesting videos, there you get often very strong setups and moves and range expansions, and you get like R10 trades in some cases. So this is what we are really hunting for, and the multi-time frame situation, once it aligns with the Stacy Burke signals, point you to this direction. Once you get a fake out low here in the other case, as discussed on the other page before, then you want to be careful, because I mean, maybe you still try to short that, but then I would wait for the daily breakdown level to be lost again. Otherwise there might be a short-term trap for shorts here, and they might first push up again before they lose it again. So once you're coming out of a fake out low, you really wait for this level to be lost, or for a new fake out high. So they might just come up again and then trap the highs again. So you have a day zero situation, trapped shorts, trapped longs, and then it blows in one of the directions, and typically in the one that is aligning with the higher time frame trend. So that's the logic of the multi-time frame setups, and you see how nicely the Stacy Burke signals help you to see if it's a very good signal or if it's a normal signal. But you don't need the Stacy Burke signals as a invalidation. It's just helping you. So for me, if you look at this logically, for me it makes much more sense to start off with the multi-timeframe signals because they are dominant, and then take Stacy Burke as alignment and confluence, because the other way around, you always might find something invalidating your setups, and then you don't have anything, right? So it's better to start with the thing that's dominant and helping you to find out the right setups where you then get your profitable trades. So final example. So this is kind of one of my favorite setups where you really see how Stacy Burke and multi-timeframe comes together perfectly. It's a reversal day, so a continuation counter extended trend. So you have previous day high with a fake out high, so 3 days of longs, but in a monthly breakout, weekly breakout. So it's a classic reversal at maybe all-time highs even. What you want to see is a first red day. So the previous day closed red, trapping traders at the high. Then you might already be in 3 days of long, or you get another push up for the last 3 days of long push. Maybe you are slamming here into a higher time frame level, then it's even better. And then on the lower time frames, you look, as you know, at the 8-hour range. You want to have an 8-hour fake out high, then you know that there is trapped traders on the lower time frame, then you know you have trapped traders on the higher time frame, and weak hands in the market that are anxious to secure their profits. So once this then moves and traps traders at the high and the other ones are jumping out of their position, this collapses strongly. The entry is below the 8-hour high, maybe with a lower time frame 5-minute fake out high, and you're adding at the 8-hour low for large moves. That's the next confirmation, breaking down out of the 8-hour range. Then you get into potential first take profits. That's the low of the day. Maybe for a nice setup you even add here if you're targeting a full range expansion. Then the next checkpoint is previous day low. Here you might take your first profits. So that's the classic take profit situation. So often here you're already in R3 or 4 or 5 even. Then you might close out all your trade. What I sometimes do, if it's end of the week, I just move my stop loss to profit and then gamble to get the range expansion. Or you can take partial profits. I don't like that because you really kill your risk reward. So I typically just hold on to it with full size and see if it goes or not. Take the bet or leave it. And then the next target could be 8-hour range expansions or daily range expansions or previous day range expansions. So you need to look at the price action to judge that. But very often, if it's a nice setup at the end of the week, you look at the range expansions. So this is kind of a classic setup where you see how these two systems come together. So I hope this was helpful for you. I think it really shows that Stacy Burke's system is rather a discretionary system, and he might be able to see all the things that we now discussed just by looking at the chart. But for traders like us that have less than 20 years on their belt, it's always good to have some mechanical elements and signals on the lower time frames that help you to stay out of stupid situations and spontaneous decisions. And I think the combination of these two systems, how I trade it, can be extremely powerful. And if you watched my backtesting video, you see that a hit rate of 80% is actually realistic with this system, as crazy as it sounds. Or it could be possible at least. Realistic it's probably not, because you're always doing something wrong the one or the other way. but it definitely pushes you in the right direction. So if you are interested in this style of trading, check my watch list. There is a lot of videos around this now, or join the Discord. There's a lot of fellow traders now that trading that system. If you have any questions, ask in the comments. I'm happy to help you with that. So have a nice day and thanks for watching.